What does a loan processor do? They facilitate the mortgage application process, ensure documentation and information are complete, and act as a link between the borrower, the loan officer, and the underwriter. They ensure compliance with lender criteria and regulations. The initial loan application is filled out by the borrower. However, throughout the loan process, the loan processor is typically responsible for updating the mortgage application as documentation is received by the borrower or third-party sources. Items like pay stubs, bank statements, and hazard insurance will be received and reviewed by the processor, and they will update the loan application with the data found on these documents. In most companies, the loan processor is the main point of contact for the borrower. This means that they are often the first person to see and review incoming documentation. Not only will they update the loan application accordingly, they will also be on the lookout for fraud, red flags, and any signs of money laundering. Real estate purchases represent a large segment of money laundering activities, and most loan processors are trained on the job to recognize these patterns. As I mentioned earlier, the loan processor typically serves as the initial reviewer of documents, and a significant aspect of their role involves conducting a meticulous examination of all incoming documents. They pay particular attention to key details, including verifying the presence of all pages in a document. For example, if a bank statement consists of 10 pages, all 10 pages must be included. Processors also check for legibility, confirming that no information is cut off and that all items contain up-to-date required information. Delays in this review process are a top frustration for borrowers, who may be asked to provide replacement documents at inopportune times. By understanding the level of service expected and reviewing documents with diligence from the outset, loan processors help prevent misunderstandings and ensure the mortgage application progresses smoothly. The loan processor acts as a link between the borrower, loan officer, and the underwriter. They are the communication hub, serving as a central point of contact. The mortgage loan processor ensures effective communication flows between all parties involved in the process. They play a vital role in relaying information and requirements between the borrower, loan officer, and underwriter. This keeps everyone on the same page. The processor's involvement maintains clarity and transparency throughout the application process. This prevents misunderstandings and fosters a smoother loan journey. As a key determinant of borrower satisfaction, the loan processor wields significant influence over the overall loan experience. Loan processors ensure compliance with lender criteria and regulations. They play a vital governance role by verifying regulatory compliance and preventing fraud. During routine phone conversations, borrowers may inadvertently provide signals about occupancy fraud or undisclosed liabilities, as they view processors as neutral parties. Being the main contacts, processors maintain unique positions to detect inconsistencies in living arrangements or financials. For occupancy fraud, borrowers may misstate their primary residence when the property is actually an undisclosed investment. With undisclosed liabilities, applicants may intentionally omit debts from applications to secure better loan terms. By picking up on verbal cues that contradict the loan application, diligent processors can identify situations requiring further scrutiny of borrower eligibility and risk mitigation. Their governance protects the interests of both the borrower and the lender by upholding compliance and transaction integrity. Throughout the process, processors maintain transparency and trust by adhering to ethical practices and regulatory guidelines. Their oversight and attention to detail help ensure the fair and equitable treatment of all applicants. This allows processors to facilitate access while also preventing abuse. In conclusion, processors provide critical value well beyond administrative tasks. Through governing compliance, upholding ethical practices, and ensuring fair treatment, processors champion institutional integrity. By safeguarding transactions from fraud and misrepresentation, they protect stakeholder interests. Diligent processors give applicants the benefit of doubt while verifying details that preserve credibility. Processors occupy an intriguing middle ground, serving as information hubs while directly influencing the borrower's lending experience. Their behind-the-scenes work shapes reputation and outcome. Precision in review prevents delays that frustrate borrowers, while caring communication provides reassurance and guidance. In many ways, processors define the human dimension of an otherwise arduous and highly regulated process. Mortgage loan processors are the glue binding people, principles, and procedures into equitable access to home ownership. They are gatekeepers who question carefully yet welcome warmly. Processors personify diligence, integrity, and clarity, elevating a transaction into a relationship where trust can prosper.